Here are the crypto top headlines covered in this video. Crypto markets rally, but Ethereum struggles to keep pace with Bitcoin. Next, forget Memecoins. Bitcoin is driving the bull run. Also, filing suggests SEC is exploring grounds to deny spot Ether ETFs. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We have a quick request that doesn't cost you anything in order to help. Help us grow this channel to 1,000 subscribers by September, which would be our channel's 1-year anniversary. All we ask is that you click on the like and subscribe buttons as well as the notification bell. By clicking on these, it does help grow the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, crypto markets rally, but Ethereum struggles to keep pace with Bitcoin. ETH price continues to trail far behind Bitcoin's year-to-date gains, even after the crypto market responded positively to today's CPI print. On May 15th, the cryptocurrency markets saw a 5.5% increase in total capitalization following the release of inflation and retail sales data from the United States. However, Ether failed to fully capitalize on this bullish momentum. Ether last closed above $3,000 over 5 days ago and has underperformed the leading cryptocurrency, Bitcoin, by 22% since the start of 2024. U.S. macroeconomic data backs the rally in some scarce assets. Crypto markets responded positively to U.S. Consumer Price Index, or CPI, data showing a 3.4% year-over-year rise in April, which aligned with market expectations. However, retail sales data for April, released on May 15th, unsettled investors as it indicated stability from the previous month, contrary to economists' forecasts of a 0.4% increase. This development increased the likelihood of the U.S. Federal Reserve implementing measures to stimulate the economy. Even if the U.S. Fed decides to maintain interest rates above 5.25% for an extended period to control inflation, the central bank may resort to actions such as purchasing government securities to boost the money supply and reducing the discount rate at which banks borrow from the central bank. Essentially, even a hint of continued liquidity provision can shape economic expectations and behaviors. Contrary to what might be expected, weaker economic activity is often seen as an indicator that more money will be injected into the system, which benefits investments in scarce assets like stocks, gold, and cryptocurrencies. Eventually, the government will need to issue more debt to fund these expansionary measures aimed at preventing an economic recession. Over time, inflation is likely to rise due to the additional money circulating, regardless of the interest rate. Some analysts believe that the upcoming U.S. Securities and Exchange Commission decision on May 23rd regarding Van Eck's spot Ethereum ETF application is a key reason for Ethereum's inability to surpass the $3,000 resistance level. The uncertainty surrounding this event leads traders to postpone their investment decisions until the outcome is more certain, which is logical. No matter how optimistic one might be about Ethereum's long-term prospects, a rejection from the SEC could lead to a short-term market correction. Eric Balchanis, a senior ETF analyst at Bloomberg, has expressed doubt about the approval of a spot Ethereum ETF in 2024, given the regulator's cautious approach towards products that may be classified as securities, particularly those that include native staking services. The skepticism is also evident in the Ether derivatives market. Ether's derivatives markets reflect a lack of optimism. To understand how professional traders are positioned, it's essential to examine the ETF futures and options markets. In neutral market conditions, Ether futures contracts are typically priced between 5% to 10% above the regular spot prices of ETH to account for the extended settlement period. Currently, the Ether futures premium basis rate is at 9%, a figure that has remained stable for the past 2 weeks. This level indicates a general lack of enthusiasm concerning the decision on the spot ETF, suggesting a neutral sentiment among traders. In the options market, there is an even balance in the demand for call or buy and put or sell options, as both types of instruments are trading at similar price levels. Typically, if traders expect a drop in Ether prices, the 25% delta skew metric will exceed 7%. Conversely, periods of high market excitement often result in a negative skew of 7%. If there had been an increased demand for bullish trades in anticipation of the spot Ethereum ETF decision, whales and market makers would likely have raised the prices for contracts that provide upside price protection. This would reflect their expectation of higher future prices and their intent to capitalize on traders' willingness to pay more for potential gains. Although it's challenging to pinpoint the exact reasons behind Ethereum's inability to capitalize on today's gains in the cryptocurrency sector, ETH investors do not seem particularly optimistic about the approval chances of the spot Ethereum ETF. Additionally, other factors, such as the ETH supply becoming inflationary for the first time in 18 months due to reduced transaction fees, may also be contributing to keeping ETH prices below $3,000. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline: forget Memecoins, Bitcoin is driving the bull run. The success of Bitcoin ETFs and the influence of the Bitcoin halving is having a significant impact on cryptocurrency markets. Bitcoin, not Memecoins, will continue to be a pivotal driving force in this bull run, courtesy of Bitcoin exchange-traded funds and the influence of the halving. This was a key takeaway from day one of the Next Block Expo in Warsaw, as prominent industry insiders unpacked major trends of the current market cycle. Bitcoin remains a clear focal point and driver of sentiment midway through 2024, as four experts told Cointelegraph on stage. Adrian Zunzike, founder of the trading education platform The Burb Nest, said that historical data around previous halvings suggests significant upside for BTC into 2025. From 2011 through to the peak of 2013, we observed a 9,000% growth in the price appreciation, Zunzike said, highlighting that Bitcoin bull runs in 2017 and 2021 produced 3,000% and 700% gains respectively in the value of BTC. Zunzike said Bitcoin remains a core indicator of market performance. Those are the facts. There's no way to refute that. Bitcoin halving history has brought a massive price rise. Hence, relying on the facts, the data is very favorable. Ben Yorkey, Ecosystem Vice President at exchange platform WooX, also highlighted that there was no longer regulatory ambiguity around Bitcoin. He pointed to government and institutional validation with approval of Bitcoin ETFs in the US and Hong Kong as key examples of this. It makes it a very attractive proposition to young people around the world, he said. Regulatory green light is good for Bitcoin. Criticisms of Bitcoin's utility are also being nullified as the proliferation of the Lightning Network and other functionalities that allow a user to maintain full custody of their BTC. Yorkey said that adoption of Bitcoin services like Lightning will ultimately quash these arguments. For the last 10 years, we've been building a lot of infrastructure with applications like Lightning. Once these applications take off, the utility naysayers will have very few places to hide. Mike Matsumura, general partner of cryptocurrency asset fund Gummy Crypto, echoed these sentiments, suggesting that the development of infrastructure to improve the ability to use Bitcoin for payments would be an additional driver of capital into the ecosystem. Zunzike added that the timing of regulatory green lights of Bitcoin ETFs reflected the seasonality of investment cycles, with summer months often driving market performance of the S&P 500 and the Nasdaq. The ETFs nicely aligned because there was demand from the institutions and there was a legal infrastructure. All those big pension funds, all the central banks that are actually entering the space from 2025 onward. Zunchek also highlighted historical trends around U.S. presidential elections, driving up performance of traditional markets, spilling over into Bitcoin in years past. Our next top headline, filing suggests SEC is exploring grounds to deny spot Ether ETFs. A March 4th filing for BlackRock's spot Ether ETF called for feedback on whether the investment vehicle could be listed as a commodity. Analysts have unearthed details from a March filing with the United States Securities and Exchange Commission that suggests the regulator may consider labeling Ether a security. In a May 13th X post, Davis Polk and Wardell associate Scott Johnson reviewed a March 4th filing from BlackRock over its application to list and trade a spot Ether exchange-traded fund on the NASDAQ. The filing delayed the deadline for the Commission to decide on a spot Ether ETF from BlackRock until June, but also called for public feedback on whether the investment vehicle could be filed as a commodity. The obvious purpose is to potentially deny on the basis that these spot filings are improperly filed as commodity-based trust shares and do not qualify if they are holding a security, said Johnson. According to Bloomberg ETF analyst Eric Balchanas, the SEC filing was buried 50 feet deep in a pile of legalese, but this did not change his speculation. The regulator's odds of signing off on a spot Ether ETF were slim to none. The SEC must decide whether to approve or deny Van Eck's spot Ether ETF by May 23rd, the first in several applications waiting in the pipeline. Should the SEC deny Van Eck's application, the Commission could turn down spot Ether ETFs from ARC21 Shares, Hashdex, Invesco Galaxy, BlackRock, and Fidelity. Grayscale withdrew its spot Ether ETF application on May 7th without explanation. Van Eck CEO Jan Van Eck reportedly doubted that the SEC would approve his company's offering in May. Central to the SEC's decision is whether the Commission considers ETH a security or commodity. Despite many previous public statements from Chair Gary Gensler declaring ETH was not a security, reports suggest that the Commission has launched a probe into Ether. Gensler will speak at the Investment Company Institute Summit in Washington, D.C. on May 23rd. So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.